US markets overnight. Let's see what Stan Shamu from IG in Melbourne makes of them. Stan, good morning to you. First of all, we're living in a fairly perverse universe where poor jobs data, or worse than expected at least, leads to a rally in the share market.
Yeah, absolutely, Kate. And at the moment, it really does look like the whole global economy is very stimulus-driven, and that's exactly where the focus is at the moment. And in the US, it's primarily tapering, and when we can expect it to start. As a result of that poor jobs number, we actually saw the S&P rally to its fourth consecutive record, and that really did support the rest of the risk space as well, as the US dollar lost ground, and of course the tapering expectations continued to be pushed forward from an initial expectation of tapering by the end of this year. Of course, we had that non-farm payrolls number coming at 148,000, well short of estimates in the 180,000 sort of range. But at the same time, the unemployment rate dropped to 7.2% from 7.3%. But this was mainly due to a drop in the participation rate. A slight glimmer of hope was a revision higher in the August payrolls to 193,000 from 169,000. So that really went largely ignored by the market, which is obviously looking for further stimulus. And the talk now is that we will see potentially a tapering only start first quarter of next year, with some actually now calling for a taper, so to speak, in terms of tapering there. I think we have heard from various Fed members, including I think Charles Evans came out and said he's looking for a print of 200,000 before even starting to consider tapering. So with that in mind, it certainly looks like they're well short of the run rate they need to start tapering by the end of the year, and we certainly can only expect it to start next year, as it seems at the moment.
Stan, that jobs data was enough to push the greenback lower, which in comparison then pushed the Aussie past that 97 mark again. What should we be looking at today in terms of levels when we've got a key inflation read ahead of us?
Yeah, absolutely. I think most risk currencies managed to rally against the greenback overall. We do know that disappointing jobs numbers, of course, lead to less chances of tapering, and of course this is negative for the greenback. So with that in mind, we saw the euro, the pound and the Aussie dollar all rally against the greenback. The move I was really watching was this Aussie dollar at the moment, because it's looking increasingly bullish. At the moment, we've got it trading back above that 97 level, which is the first time since May, and it really looks like it's in a good position to continue extending its gains in the short term. Of course, today we've got those CPI numbers at 11:30. That'll be the highlight for the Aussie dollar this week. Of course, apart from tomorrow's China HSBC manufacturing PMI reading. With this number, the CPI, we're expecting a headline of 0.8% increase. But of course, there are a lot of expectations in the market that they will actually print an above consensus number today, just mainly because of the recent rise in property prices. We've got utilities, energy and fruit prices also showing some big gains recently, and that should be enough to see the CPI number start to tick higher, and of course print an above consensus read. But we still feel just an in-line number will be enough to keep this momentum in the Aussie dollar going in the short term, particularly given the bullish price action we're seeing right now. The main level to look out for in the short term is in that 97.20 region. Now that's the 50% retracement for the move lower from May this year to August, and that should probably be the main deterrent for some of the bulls out there in the short term. But should we get the all clear from this CPI number, then we certainly could be pushing through that level in today's session. So it does look like it's in for a pretty solid end of the week, the Aussie dollar that is.
Okay, Stan, what about opening calls? SPY's up about 0.6% at the moment. Are we likely to test those 5-year highs again?
Yeah, absolutely. We're currently calling it up 0.5% at 5,398. So that's just short of 5,400. And of course, yesterday's big gains were really driven by that strong result from BHP. So once again, we'll be looking towards the miners for further gains. Unfortunately, iron ore was actually down for the first time in 8 sessions, but with the momentum we've been seeing from their recent reports, that's the miners that is, then it should be enough to really see them through at the open. BHP's ADR is pointing up 0.6% to about 37.20, I think. So it does look like it's in for a strong open already. The level that we're looking out for the local market in the short term is about 54.27. Now that's actually a 61.8% retracement of the sharp drop from 2007 all the way down to 2009. So we've really retraced quite a bit of that move, and we'll have to see how the market responds to those levels. Now, in terms of stock performance, the next sector after mining that we're looking at now is the mining services companies. Of course, this recovery in the mining companies is always a good indication of mining services companies set to come off some of these cycle lows. Of course, they're one of the most, I suppose, beaten down sectors as the mining sector unwound. So eventually we would expect them to start experiencing a recovery in line with the mining companies. I think they're now in a much better position than they were a few months ago. At the same time, we've got Caterpillar set to report later today. Of course, it's a bit of a bellwether for mining services as well as the rest of the global economy. So that should be a good indication going forward. But that overall strong performance in commodities, especially gold as well, which is up nearly 2%, should be enough to see some of these gold mining names outperform the market today.
Okay, Stan Shamu, RG, thank you.
Cheers, Kate.
So looking for some nice gains when we open up today, Stan said, possibly about 0.5%. Well, the federal government is expected to begin the sale of Medibank Private in as little as 2 months as it tries to bring the budget back from the brink of decline. The coalition looking for billions of dollars in budget savings, and it's tipped to be the first major asset to be offloaded worth $4 billion.